Mr. British Hodl. What do you think is going to happen to Bitcoin over the next 6 months? Let's just get right into it.
Yeah, well, firstly, thanks for having me. I know we've been trying to have this conversation for a while, so apologies on my side. I've been traveling and everything else, so I'm glad we can have it. So next 6 months, here's the game plan. The next 6 months, liquidity is about to start loosening up. We're going to see monetary policy ease up. We're going to start, I would guess, a 4 or 5 year cycle of monetary easing. I think we're going to accelerate on Fed rates down to around 2.3% on the 2 year. I think that's going to drum up a lot of liquidity. I think Bitcoin is going to be a benefactor of that liquidity. Bitcoin is furthest out on the risk curve as an asset at this moment in time. And as a result of that, it is going to be the most highest leverage risk on asset. And so, yeah, I mean, we're walking into a very, very bullish period. You've got options coming out. You've got monetary policy easing up. You've got everyone that's involved in smart money is now educated on Bitcoin as a result of BlackRock. And so it's looking like it's going to be a very, very bullish time period coming forward.
Completely agree. I actually want to go into a couple of topics that you just mentioned there. So I want to first ask you, do you actually think Bitcoin is risky? Do you feel like Bitcoin is risky? The way that I see it, actually, you give me your answer, and then I'll give you my answer. Do you actually think Bitcoin is risky? You said that it's at the top of the risk curve, but what are your thoughts on that?
Yeah, as an investor personally, no, I do not think Bitcoin is a risky investment. But as an investor dealing with worldwide capital markets, I have to look at what Bitcoin's position is currently, and it is the furthest on the risk curve that you can go. That doesn't really mean it's risky. It just means that from an investment point of view, from a capital markets point of view, it's viewed as a risk on asset.
Absolutely, yeah, I agree with that. I think what most people see is just the volatility. They see the price going up, coming down, going up, coming down, and I feel like even the financial industry is kind of spreading the idea that Bitcoin is risky because I think that they benefit from it. I mean, I know that, for example, BlackRock wants retail to buy as much Bitcoin as possible. I think, for example, some people see these covered calls that are coming up. They see them as risk free. They see them
Mhm.
as obviously the options on the Bitcoin option on the Bitcoin ETFs. They see them as risk free, but I don't think that's going to be the case. I think what's going to happen is in the next uh, 6 months to a year, I think there's going to be a supply shock where people are going to see that this thing is risk free. They're finally going to realize it. They're finally going to understand why. They're finally going to go into that rabbit hole, and they're finally going to understand that, okay, this is not going anywhere. The only thing that we can do to fight this is buy some more, and that's when the game theory starts. I don't know what the timeline on that is. I think it could be over the next 6 months. I mean, it makes sense just because liquidity is increasing. So, what are your thoughts on that?
No, I think it's already started. I think the fact that BlackRock is out here with a PDF talking about all the reasons why you should get into Bitcoin is basically it's game over for, Wall Street is going to try and fight this thing. Like this is like a deal done. Wall Street is coming. They're not actually coming. They're here now. They're actively selling this asset. I think by the end of the year, you'll have 50,000 advisors selling this asset. So far, we have like 35,000, something like that, across two firms. So yeah, this is happening. If you're sitting there going, "Oh my God, everyone's trying to fight Bitcoin," you don't know what's happening right now. Like it's over. The fight, as far as the fight goes against Wall Street, it's over. Now there may be a governmental fight, there might be this, that, and the other, but Wall Street is no longer fighting Bitcoin. This is happening. They are owning Bitcoin. They are buying Bitcoin. They're going to buy more Bitcoin and keep buying because they understand the finiteness of the asset.
The way that I see it, now tell me if I'm wrong in the way that I think here. Uh, I think what Wall Street is going to do because they figured it out. Completely agree with what you're saying. I think they're not fighting it anymore. They want to actually go with they actually want to work with Larry Fink. Larry
Yeah.
Fink is so bullish on Bitcoin that they want to make sure that they're on his good side because they know that that's how they benefit. They know that BlackRock is the holder of the biggest amount of assets. But I do think that this is going to lead to a melt up. So a lot of people think we're going to go through the regular cycles. We're going to go through the 500% increase and then 80% drop. Do you what do you think of the
Yeah.
cycles coming up?
Yeah, it's interesting. I floated the idea last year of this idea of this perpetual cycle that just happens where Bitcoin transitions from its 4 year, bull and then bear market cycle, bull run for 6 months and then bear market for 3.5 years, where it transitions from that into more like the S&P 500. And I think that's what happens when an asset gets more and more adopted. So I think the cycles will become a lot smoother, which will help more people get into the investment. And then when you have options coming in, you've got the ability to speculate on the options, but the market maker also has to hedge. So you start limiting the volatility on the asset as that as it continues its ascend up. Now the differential between Bitcoin and all these other assets is that there is a hard cap. You can't just print an unlimited amount of Bitcoin. So we're going to see how Wall Street and its plans deals with the fact that there's a hard cap on the asset.
So do you still? I was watching one of your videos. I was just seeing what your opinion on this was. Do you think these options are going to be used for people to just keep holding for longer and longer? Like, what do you how do you think that mine? I saw your explanation of mining, like mining companies. They're going to be selling puts. They're essentially using it as insurance. Can you explain that thought of yours?
Yeah, so there's several different ways that you can use options, right? Number one, you can use options to generate a cash flow on a holding, right? Because you can let somebody speculate against it, you can sell them a covered call, and you can take a premium on a monthly basis. That was my thought. That's how I thought I would be using options. And then I've been thinking about it over the last couple of weeks, and I don't think it makes sense anymore. So I put out a video explaining why even I don't think I'll be using the covered call strategy on Bitcoin, and we can touch on that later. The second way to do it is, if you're at the bottom, quote unquote, bottom of a run, you can then buy call options, right? And you can speculate that over the next few months, next few years, we're going to see a rapid price appreciation and then pay a premium to basically control a larger amount of Bitcoin than you can afford. That's one way of doing it. Second way, or the third way rather, is if a mining company or anyone really is at the end of what they perceive as a bull run, then they can take a percentage of that profit and buy put options. And put options is like house insurance, right? Like if just in case the house burns down, you're protected. And if it doesn't burn down, you've paid a premium. Everybody understands that, right? Like if you have to own house insurance, but that doesn't mean your house is going to burn down on a yearly basis. So it is a cost that's added to the Bitcoin, or to your position rather, to your home's position. That's the way you should account for it, right? If you pay house insurance, you should add that house insurance onto the cost of the house over the period of time that you own it. But people don't do that. But that's how you should do it. And then, if it doesn't burn down, okay, you've at least you've got the insurance there just in case. And that's how people will use options too. And there's many other ways of doing it, right? Then you've got the idea of selling put options, right? So if you want to sell that insurance to someone and you've got a bunch of cash and you're okay buying the asset, let's say at the bottom of the market, someone's panicking and they want to buy house insurance, and you're like, this house just got built. There's no way this thing is going down. Well, now you can sell them the insurance and take the premium until the house burns down, in which case you've got to pay up, right? But if you're okay buying the house, then there's nothing wrong with that. MetaPlanet just executed that right now on their cash holdings. So those are the ways that to use options in a simple way. Then there's of course different hedging strategies that sophisticated hedge funds will use. I think most people that are watching this are probably too stupid to execute anything that I've said. And I think overall, the 35 to 50% CAGR on Bitcoin is better than anything that anyone is ever going to get. So I think instead of trying to worry about how to make a 2% a month return or a 1% a month return using cash flow, you should just hold on to your Bitcoin.
I mean, I wouldn't say stupid. I'd say more misinformed. I think just because we don't really learn about finance and all this stuff. I mean, the way that the system has been working so far, it's been on training wheels essentially. Because, for example, the market
Right.
can't drop a certain level. We have all of these, what are they called? Where the market gets paused if it drops too much.
Yeah.
Sorry, what are they called? I forgot what they're called. Circuit
Well,
breakers.
the circuit breaker. Yeah.
So we have those things. Um, we have so many insiders who have so many of the asset that if it goes up, so let's say for example, if Amazon starts going up a ton, if it gets overpriced, we know for a fact that Jeff Bezos is going to sell a bunch of it.
Yep.
He's going to come out and sell hundreds of millions of dollars worth. He's going to sell a couple $1 billion worth, and he's going to fulfill that demand, and the price is going to come back down. But I don't see that happening with Bitcoin. So the way that I see it, a lot of people are, as you explained, a lot of people are just looking for the covered call options. They want the 2% yield. I did watch your video. Your video is awesome. I thought you explained
Thank
it
you.
really well.
Thanks.
I have a feeling that I maybe I pushed you into doing a little bit more research, because when we were having a conversation, I think you had a video from before that was saying, oh yeah, covered calls are great. But I mean, I agreed with what you were saying there as well. But just in general, I feel like most people don't see that Bitcoin can go up 50, 60, 70% overnight,
Yep.
right? And then they think that, okay, I'm going to set my strike at 20% above the current price, and then they get that 20% return. So they're just thinking in fiat terms. They're not thinking in Bitcoin terms. They're
Right.
not thinking that if the price rises 50, 60, 70%, if it rises 100% overnight, you're down 40% on your position. You've lost 40% of your Bitcoin because you wanted to make 2% a week or 2% a
Right.
month or whatever it is.
Yeah, this is the way that I thought about it, and I've used covered calls on gold. I've used covered calls on S&P 500. I've used covered calls on QQQ. I've used covered calls on REITs. So covered calls is a very popular income generation strategy for institutional and higher net worth individuals. Right? It's just like owning real estate. Basically, the stock becomes a real estate, and the market becomes your tenant. Here's my thinking on it, and if anyone is thinking about using options to generate a cash flow by utilizing the covered call strategy, here's my thought process on it. Let's say you had $1 million savings account, right? Like that savings account had $1 million of cash in there, and every year it was compounding and giving you $500,000, right? Just without any risk. It's just you wake up one day at the end of the year and you have 500. It's 1.5 million now, right? Now, the question that you have to ask yourself is, what is the risk adjusted return? So, how much cash, let's say I came up to you and said, okay, you've got this $1 million savings account. It's giving you 500,000 like clockwork every single year. I have an investment opportunity for you. How much more than 500,000 do you need to make in order to take the risk of a 40% chance of losing that $1 million? Right? That's really the question here. And I would argue that most people would say, screw that, I'll just keep the $1 million and I'll make the 500,000 a year. Well, that's what Bitcoin is. Bitcoin is compounding at 50% over the last 5 years. I think actually even longer than that, maybe even 10 years. 50% a year. Let's say it's somewhere between 35 and 50%, right? Over the next few years. So you basically got $1 million savings account, and it's giving you $350,000 to $500,000 a year, like clockwork. And you, for the sake of trying to make $120,000 a year, want to put that to risk, right? That's what you're doing with a 1% strategy. So the question is okay, let's say I'm making 50% a year, right? I need to make above and beyond that. I need to make another 50% in order to make it worthwhile. Well, now actually that's going to be even more absurd. Let's just say you're making 25% a year, and I need to make 50% a year to make it worthwhile putting that account up at risk. Well, that's 4.16% a month uncompounded, right? To make 4.16% a month on gold, on the Nasdaq, on the S&P 500, on a REIT, You have to go so close to the money; it's less than 20% out of the money that you're going to be placing that position. Well, Bitcoin moved 20% out of the money last month, right? People don't realize that we're in a sideways market and it's moved 20% in a month, regardless of a bull run, regardless of the USA finally announcing a strategic reserve, regardless of BlackRock, getting other nations involved, regardless of any of that, it moved 20%. So now look at the risk adjusted return, and it just doesn't make any sense to me to put the capital up for risk just to generate that 1 or 2% a month. I think there's better ways of doing it.
Yeah, I don't see I don't see how that makes sense. So the way that I see it, I mean, if so many people just think that it can't double overnight.
Yeah.
They think that it's not possible, but I think they don't quite understand the price is determined at the margin. I
Yes.
don't think they get that. See, that's the problem that they don't understand. I think I actually heard a great example or a great explanation of price determined at the margin from you.
Yeah.
Can you explain what? Can you explain that for Bitcoin?
Yeah. I was just looking for a prop. So let's say this is
Oh, perfect.
this is a lens cleaner, right? Let's say there's 10 of these in the whole market. The whole market is 10 lens cleaners, and 10 individuals own these lens cleaners. But 8 of them have sworn that they're never going to sell, right? 80% of the market is not available for sale. So really, the market is only 2 lens cleaners. Even though there's 20 of them, I'm sorry, even though there's 10 of them, there's only 2 because the available for market, the available for sale market is only 2 lens cleaners. So now 10 more people walk through the door and they look at 10 lens cleaners and they go, okay, well, I'm just going to pay. And then 8 people go, no, 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 my lens cleaner is not for sale. So it's only 2 guys. And the 2 guys are like, wait a second, I'm willing to sell my lens cleaner. And there's only one other person willing to sell their lens cleaner. And there's 10 of you guys. So now how much are you willing to pay? Right? Now those group of 10 people have to bid up the price of those 2 lens cleaners because the price is set at the margin of the available supply, not of the total supply. And a lot of people misunderstand this, and this is why I've been banging on about the bull market multiplier, which people completely goes over their heads. Even now, even though I've probably done 30 videos on this thing, it still goes over people's heads because we're not used to understanding this. Bank of America put out this research at the peak of the last bull run, and they said that it was taking like $92 million, $93 million to move the market cap by 1%. Well, that's $1.1 billion at the peak of the last cycle, right? That's 118 to 1. That means you put $1 in and the market cap goes up by $118. That's never, ever been seen before, ever in any other asset. And that's this impact of the prices at the margin. Why? Because 80% of people hodl no matter what. And that's going to get worse now with options. Because imagine you can hedge your position without having to sell it. So now you've got less supply than has been available. So all of these things are going to matter, and they're going to make a big impact on price. So I refuse at this point, unless I see something different. At this point, I refuse to sell call options to generate cash flow at 1 to 2%. Anything above that is probably going to be too risky. And anything below that, what's the point?
I think at this point, a lot of people are still not getting as you said, the bull market multiplier was, I don't remember what the term was,
Yeah.
but I don't think people are getting that because they don't get that there's a finite amount of Bitcoin, and no matter how high the price goes, no matter who buys how much, let's say China goes and buys, I don't know, $10 trillion worth, and they could probably do that at some point. You can't stop them from doing that. You can't stop the US government from printing money to buy Bitcoin. You
Right.
can't stop China from printing the yuan to buy Bitcoin.
Right.
And that, I think that's what people don't quite understand. When in one market the price goes up, people see the arbitrage opportunity and everybody bids up the other market prices because
Well, also every U.S. capital market, which is the greatest capital markets in the history of the world, and they have, like you mentioned earlier, a circuit breaker. What happens when the circuit breaker in the US goes off and everyone goes, that's our opportunity? Right?
Yeah.
The circuit breaker goes off in the US IBIT stops trading, and China starts buying. And then the market opens again, and it opens 25% higher than it was than the circuit breaker. Like, what happens at that point?
I think what's going to happen is we're going to see a move overnight or over a weekend where nobody can sell regardless. They're just going to get assigned the next morning, let's say over a long weekend on a Tuesday or on a Monday. They're going to get assigned, and there's nothing they're going to be able to do. They're going to end up with significantly less Bitcoin because the reason why I'm saying this is because a lot of people are so used to getting uh, passive income from real estate and
Yep.
from stocks. They don't see that stocks and real estate are going up because of the money supply. They think that they actually have skill in timing the market. They think they have
Yeah.
skill in
100%
figuring
true.
out where the market is going. So I think what they're going to do is they're going to try to do the same thing with Bitcoin. Bitcoin's been moving sideways for the last however long, how long? 6, 7 months?
8 months.
Essentially sideways 8 months. And what they're going to do is I've actually gotten comments on this. I've made a post about this. I explained, don't touch the covered calls. Don't do it. It's not worth it. You're not smart enough. You're not sophisticated enough to do this. You're going to lose your Bitcoin. But I was getting comments saying, "Oh, it's never happened before. It's moved sideways for however long." People strongly believe that there's a double top. Do you think that's even remotely possible?
No, no, I don't. I think you're. I think if you think that BlackRock is in the game and there's a double top on the market, can I swear?
Of course.
You're a fucking moron. It's as simple as that. No, I think you're right. I think that everyone should really take a long, hard look at what you are risking to make 1% or 2%. Because, like I said, anything more than that, you're coming so close to the fire that, probably with a less than a 10 to 12% move, you're going to be out. And like I said, we're going sideways, and Bitcoin moved 20% from the from the trough to the peak last month. So imagine trying to make, a justifiable return. And people don't really think about that, right? They always just go, "Oh, but I'm making 1% because, a friend of mine said this. Bitcoin didn't go up 35% in 2022." Yeah, no shit, moron. You're looking at a compound annual growth rate, and it means that you have to be a little bit smarter in planning your cash flow. Um, but you're looking at a compound annual growth rate, right? That's really the return metric that matters here. Bitcoin has become the hurdle rate at this point for anyone who understands it. And it's about to become the hurdle rate for fucking BlackRock. Think about that. Think about how long it's going to take for BlackRock to go, wait, every one of our people any one of our clients that's looking at any of our prospectus, all they're seeing is Bitcoin at the top of the performance list. And all they want is Bitcoin exposure. Now, if you want to generate a cash flow, right? Some people use this. So some people will make a bunch of money. Let's say they make $10 million, right? They'll take $1 million and they'll shove it into high cash flow generating real estate. They'll never expect any capital appreciation from the real estate, but it will generate them a 12 or 13% return on the cash flow. That will be an option. Right? That will definitely be an option. I think GBTC already announced, Grayscale already announced a cash flow fund that they're going to get through, which basically means they'll do the call options for you, and all you'll get is a dividend on a monthly basis, but there'll be no appreciation. That's a huge market. Now, if you want to do that, that's absolutely fine. And the question is how long does it take for an asset manager that was using a REIT to do that to say, "Oh, we can just do this with Bitcoin," right? And that's really the exciting thing here. It's just opened up so many markets and so much capital flood into this.
So they actually do have that in Canada, the yield ETF. It's BTCY. I
Okay.
can't find it on here. Oh, actually, it's right here. So I've actually seen it. So in the last year, let me actually share my screen. Give me 1 second. So in the last year, this ETF is up from 357 to how much? What percentage is that? From $3.57 to $6.07. I think that's underperformed the actual Bitcoin
It has to.
yield. That
Yeah, it has
right,
to. It has to
right.
underperform the yield because you're trying to generate that. But I wonder what the dividend on this has been.
On this one, I think it's been around 14% or something.
Okay, that's pretty
It's
good.
been they've been giving a decent dividend, but I mean, see, that's what I don't quite understand. When you're holding an ETF, first of all, you're taking the risk of the ETF messing around, something happening on the custodian level. I don't personally like that. Like I knew about this yield ETF. I already knew about it. But the way that I see it, if you're holding these yield ETFs and you're essentially getting a lower yield, or you're not appreciating as much over time. In a way, you're just selling your Bitcoin.
Yeah, but that's the point of it, right? That's what people are doing with real estate. I'm not saying that's what. Look, there's two ways to make money with investments. There's cash flow, and then there's capital growth. And in every study that's ever been done on, well, I would say in the last 20 years, that's been done on the S&P, for example, the buy and hodl always outperforms the yield generation strategy. However, depending on your wealth, you may just want an income so that you can hodl your Bitcoin, right? So you may say, okay, I've got a $10 million portfolio. I'm going to take $1 million and shove it into this ETF that's giving me a 20% dividend. And I'm going to make 200,000 a year live on that so that I can let the other $9 million of Bitcoin just sit there and go up, right? That's our strategy. People do that with real estate all the time. Like I said, they'll buy real estate in a shithole part of nowhere where there's not going to be any capital appreciation, but the rental yields are high. That's a market. That's a huge multi-trillion dollar market because people need cash flow. So now Bitcoin can be utilized as a cash flow generation asset. Imagine that, right? It doesn't need to go up. We don't need to hold it forever. We don't need to do anything. We need to have a solid permanent hold just to generate the cash flow. That's great. That's a passive investment into Bitcoin that we didn't have before.
I get what again. I get what you're saying. I understand it. People want cash flow. They want because in the old system they did people did get essentially cash flow with real estate. But the issue with the old system is that it wasn't it was manipulated. Money is printed, money is added to the economy, prices keep going up. But with Bitcoin, because these ETFs, let's say for example, they risk 30% of their Bitcoin to generate a yield.
Okay.
And let's say Bitcoin triples overnight
Yep.
and they
Yeah.
lose that 30%,
100%. They
right?
wouldn't lose it. They wouldn't unless they're doing it themselves and they don't know, how to do it. That's different, right? What I'm talking about is utilizing one of these funds where you realize, okay, this 30% is no longer going to CAGR for me, but it's going to give me a 12 to 20% yield on a yearly basis.
Mm,
Some people will be happy to do that. There's a lot of retirement funds out there where the goal isn't capital appreciation. The goal is cash flow,
right.
right? So for them, it suddenly becomes worthwhile. The average person looking at it, I think you're 100% right. I think you're a moron. You try and generate your 3% return this month. You might be right for 6 months, and then suddenly Bitcoin doubles overnight. You're assigned away, and what do you do?
Yeah, and this is what I've actually seen. So I used to work in financial services before I'd work with people with their brokerage accounts. This is before I even I guess heard of Bitcoin. I mean, I heard of Bitcoin, but I didn't care about it. Um, so I'd see people constantly blowing up their accounts. They'd get
It happens every day.
overconfident, right? They see this thing going up. They see, let's say, so there was this one guy who was buying Apple shares from no, sorry, he was buying Apple options from like
Hmm.
in 2016 at some
Hmm.
point, like throughout maybe a whole month. He essentially like 50x his portfolio,
Hmm.
and then he kept going, and then at the end of it, he ended up with zero.
Yeah, it's like
Right?
blackjack, right? You just double every time you get it wrong. You double the bet
That's
every
it.
time you get it wrong, right? Black and
That's exactly what it
yeah,
is. Yeah.
yeah.
And
So
then there was another guy that I saw who I don't know what happened with our risk department, he essentially made this bet where he thought he had a limited amount of risk and he lost $2.6 million. I don't know what the call was, or sorry, what the strategy that he used was. I don't know how it happened. I don't know. It was at TD Bank. I don't know how they let this go through, but it was a massive loss on their part. And I'm sure that this guy probably won't pay it off. I don't know. Maybe he had some other assets. Um, maybe he had like cash in his bank account or something. Of course, we can't see both sides, but usually they're connected. So that doesn't make any sense. But I really think that this is going to happen to people. I think this is going to
Of
happen
course,
to
it's going to
even
happen.
these yield funds. I mean, these yield funds. If even these yield funds, for example, I was looking at the prospectus of BTCY, the one that I was showing you. I think they have something like 15 to 20% of their Bitcoin being risked, meaning that let's say they're selling calls on 15 to 20. They do covered calls, so they're selling these like that's what I meant. So they have 15 to 20% of their Bitcoin at risk. So essentially, what happens is overnight, okay, you're not going to lose 15 to 20% of your Bitcoin. You're going to get paid for the strike, but the rest of it, that 12, 15, thirteen
Yeah,
percent
but
of it, whatever it is, lose it overnight.
Yeah, but a cash flow fund, it doesn't matter because all they're focused on is the dollar value, right? So if
Right,
as long as they get you back your $1 million or whatever you put into it, plus your cash flow, that's what they care about. They're not trading
right,
on how much Bitcoin are you holding. A cash flow fund is exactly that. It is designed to give you an income, right? That's it. It's you put $1 million into this, it's going to maintain at $1 million, and it's going to make you 120K a year or 200K a year or whatever it is. That's the point of the
right.
fund. It doesn't matter about capital appreciation, and that's actually really good, right? Because utilizing Bitcoin, you can scale the fuck out of that. Think about it, right? You can take a cash flow fund that's got $20 million in it, scale it to $2 billion in Bitcoin, it will still work, right? Imagine you had to go and buy real estate with that money. Imagine the lag on that. Whereas, so I think income funds are going to start preferring Bitcoin funds in order to generate a cash flow. And again, it just opens up markets and capital and gives Bitcoin access to capital that it didn't have before. So, yes, do I think normal people are stupid for doing it? Absolutely. I made 2 videos on it, but from a institutional market perspective, if you're an asset manager that's been tasked with, creating an income fund, suddenly Bitcoin is your best friend.
Yeah, I see. I think that's something else that most average people are, as you say, stupid, as I say, misinformed. Most average people aren't going to spend the time learning this. So what's going to happen is they're, instead of just holding on to that
But
Bitcoin
most
from,
average people aren't even buying Bitcoin.
right, that's exactly what it is. So I have a bunch of videos called 99% of people will ignore Bitcoin until $1 million or more.
Right. I
And I
completely agree with you.
genuinely, right, I think that's going to happen because keep in mind, even a lot of people that have Bitcoin right now, they own it, but they don't truly understand what they own.
Yeah, most people are going to completely ignore Bitcoin until Warren Buffett tells them he owns Bitcoin.
Yeah,
And they don't realize that Warren Buffett's playing a wealth preservation game and they're playing a wealth accumulation game. Like you have to play a different strategy. And I can wait until Bitcoin gets to $1 million of Bitcoin. That's, well, let's say roughly $21 trillion market cap, and I'm Warren Buffett, and I can buy Bitcoin at that point and still stabilize my wealth with the devaluation that's going on. I can be wrong, like he was with Apple, for example. He can be wrong for a decade and then get into it and still be, make generating the most amount of money that anyone's ever heard of with the asset, but because he's playing a different game. The average person here that's trying to listen to, people that are playing, you have to understand, like the person that's telling me this, why am I listening to them? What game are they playing? What's their agenda, et cetera, et cetera? Um, and most people will just listen, wait until Warren Buffett says, hey, buy Bitcoin, and then they'll do it. I've got friends that do that. I've got friends that are telling me that they won't buy Bitcoin until their favorite gold personality. I was in the gold space, so I know how ridiculous the space is. Until their favorite gold personality tells them to buy Bitcoin, then they won't buy Bitcoin, for example. It's like, all right, well, you can stick your head in the sand as much as you want. Doesn't mean that this asset is going to stop moving.
yeah, it's gonna get there with or without them. I think the like my goal as a content creator, and I know your goal as well. Um, you're constantly preaching to people, get to one Bitcoin, get to one Bitcoin. I mean, some people are. I mean, they have the guts to say, "Oh, this guy's trying to scam us," or somebody's paying him, or this or that. I mean, like that doesn't really make any sense to me. So the way that I see it, my goal as a content creator is to teach people where this is going and make sure that more Bitcoin is held by average everyday people than Wall Street,
Yeah,
than
that's a noble
governments,
goal.
right?
That's a noble goal. That's one of the things I love about Bitcoin, coming from real estate, coming from gold, coming from stocks. One of the things I love about Bitcoin is no matter what your intention is, you can Bitcoin needs it, right? It's unlike real estate. Like when I was in real estate, the type of transactions that we would do, I couldn't talk to most people about it because there's no way they could take advantage of them, right? You needed a consortium, you needed a whatever to get involved in the deal. Um, And in Bitcoin, the craziest thing is that if you're a multi-billionaire like Michael Saylor, or you're a normal average person on the street, you're buying the exact same asset within maybe single digit percentages of costs away, right? That's never
Yeah.
happened ever before. So the problem is also with that is that people take it for granted, right? They look at Bitcoin and they go, well, everyone's talking about this. Maybe this is for this person, or maybe that's like some people are just going to miss out, and I'm completely okay with that. I listen. I don't know whether it's the British part in me or whatever, but I'm completely, and utterly okay with elitism, especially after 2020 and the national and the international flu season that we had, and the way that people proved themselves to be, either intelligent enough or not to fall for something or not, in my opinion, right? I'm okay with elitism. I have no issues with it. I think BlackRock will control a significant amount of Bitcoin, and I think that's a good thing. And if you don't think that's a good thing, instead of complaining about it on fucking Twitter all day, listen to Rajat and buy some Bitcoin so they can't get any.
That's exactly it, right? I mean, I think it can go either way. I feel like you can see the benefits, and um I can see the benefits of BlackRock owning a ton of it. I mean, they're holding it for people, they're not going to lose it, of course. There's that. But I also see the benefits of just people holding it and using it as money, right? We see so many things. Let's say, for example, I genuinely think if we start using Bitcoin as money, I think uh, real estate is going to be demonetized. I don't think people are going to want to keep their. Why would you want to keep? I mean, I guess I get the cash flow side of things, but in the next 10 years, I think if you're holding real estate over Bitcoin, you're losing. If you're
Well,
holding
the issue with real estate is that you can just say blanket real estate, but there's many different parts of real estate, right?
different parts, yeah,
There's prime real estate, there's single family homes, there's condos, there's commercial real estate, there's storage real estate, there's all of this different type of real estate. And in my opinion, if you're a government, you're absolutely looking at how do you take value from the boomer generation that has made all of this millions and millions and millions of dollars as a result of your fiat printing. And how do you take that back? You can't really do a wealth tax. Europe is going down the wealth tax route, right? I think America is probably going to go down the route of just devaluing single family homes, right? If you can just devalue single family homes or make them stagnant while you print a bunch of money, you're basically inflating away the value of the wealth that people generate. And boomers won't realize that until it's too late. And that'll be your great wealth transfer that was supposed to happen. And that'll be some kind of wealth tax if you don't pivot that into Bitcoin.
I completely 100% agree with you. How do you think they're going to do that? How do you think they're going to? I mean, I have some ideas. For example, I think there's going to be prefabricated homes. There's going to be other ways of doing it. What are your thoughts? How are they going to put the inflation on the real estate investors? They could even do it to stock investors, for all we know, right?
Yeah,
But
but
they
you
can't do it
wouldn't
to
do it.
Bitcoin.
Yeah, but you wouldn't do it to stock investors, right? Because it doesn't hurt
Okay,
them,
can
right? If you're a government, you want to do it to real estate holders because they're the ones. Your voters need a place to live, right? Your voters don't need Apple stock, so it's better to do it to real estate and reduce the value of homes, and then say, look, look how many new first-time home buyers we've generated by reallocating the wealth from the boomers that thought they had it by just reducing the value of real estate. You don't even have to reduce it. You can stagnate the value of single family homes while letting the value of all the other types of real estate go up. And then people will be happy. Your voting base is going to be very over the moon, right? It's very easy it's super easy to do that. All these hedge funds that own all of this real estate. I think there was a bill trying to go through Congress, basically forcing them to dump it all on the market within a short 10-year window, right? Blackstone and all these guys that own a bunch of single family homes are going to be forced to dump it all onto the market. Why do you think they're pivoting to Bitcoin? They see what's coming, right? You wouldn't do it to the stock market because there's no need to do it to the stock market. The real issue is you want your voting base to have a roof over its head. You want them to have a future that they can see for their children, and you want them to have a little bit of food in their stomachs. If they have all those three things, they're not revolting, right? So, yeah, I would focus. If I was a government and I wanted to keep my people under control, at this moment in time, the number one issue is it's so expensive to buy a home. Look how politically charged and emotionally charged that debate is. Well, I would just crash the price of single family homes. You've done a wealth transfer. You've taken wealth from boomers. They don't even know that you've done it. Or they just think they made a bad investment, right? So they're not going to blame you. And then you reallocate it, and suddenly, the new generation comes in and buys up those homes at a 30 to 40% discount, and your prime real estate continues to go up. Your business real estate continues to go up, and single family homes come down. Everyone has a roof over their head. Everyone's happy.
So how do you think they would do that? Do you think they would increase property taxes? Do you think capital gains taxes or some kind of
I think
what do
you'd
you
do
think they
it
would do?
I think you'd do it by rapidly increasing supply over a very, very, very short period of time.
Okay.
The way I would do it is immediately force all of these hedge funds to dump their real estate onto the market, all the
Right.
single family homes, right? That's the first thing that I would do. Secondly, I'd keep the interest rates high enough for a while to make sure that nobody's buying anything. And thirdly, I would create tax incentives for first-time buyers, and you'll see a dip. And I would maybe get rid of a 1031 exchange or reduce it or something like that in the US. And you'll see a rapid decline, 20, 30, 40% in single family homes. You're seeing it in Florida right now. When I look at some of these numbers, they're ridiculous, right? You're seeing properties that were listed at 700,000 now on the market for 429 6 months later. That's now, right? What happens once this world sort of takes hold? So yeah, I mean, it's very easy, right? Then the boomers look at that and go, "Fuck, I made a bad investment," so they're not mad at the government. And the new voting class, the younger people, suddenly go, "Oh, look, this government got me a house for cheaper." And you let the wages continue to inflate while holding the property value stagnant, so you don't even need to see the dollar value decline. Imagine that. You got an investment, you bought it for 150,000, it's now worth 750,000. You're a boomer thinking you've done the right thing, you're a genius, right? Except over the next 10 years, the wages continue to go up at 10% a year or whatever it is, but the value of that home stays at 750,000, right? You've basically done a wealth transfer at that point. So your value of your property hasn't gone up. You perceive yourself as happy. Inflation has taken everything away, and everyone keeps it moving. You perceive it as a decent investment because at least you bought it for 150 and now it's worth 700, even though it took
Yeah,
20 years.
I think that difference between nominal and real values is what's gonna hurt a lot of people, and I'm seeing that already. I see people constantly talking about, oh my, so there's this couple on Twitter. Not sure if you know about them, but they own like 35, 40, 50 homes, and I don't even think they're making $100,000 each. So
Yeah,
I think those are the people that are going to get hit the hardest,
of
right?
course.
Because they fell for the. Sorry, go ahead.
No, Cora, I agree with you. I was just saying, of course.
Oh yeah. So they fell for the low interest rate trap, and they think that properties are going to keep appreciating, and do you? So the way that I see it, I mean, the Fed is it's stuck between a rock and a hard place. I think that's the phrase. But essentially, if they don't drop interest rates, if the Federal Reserve doesn't drop interest rates, the U.S. government is going to be in a debt spiral because they're going to keep borrowing. It's not like they're going to stop borrowing. But then the other thing is that if they do reduce interest rates, inflation starts going up. Maybe the US
Not
doesn't get into that
necessarily.
debt spiral for a little bit longer. But sorry, go ahead.
Not necessarily. You know, a lot of people we had tremendously low interest rates from 2008 onwards, and we didn't really have much inflation. Why? Because the velocity of money kept going down. So they figured out the hack. The hack is you let assets go up in value and you keep real prices down. And then when real prices do creep up, all you do is you take coffee out of the mix because coffee went up 50% in a year, and your CPI sits back down again, right? Which is what's happened now. So yeah, no, I don't agree with the fact that you lower interest rate and inflation has to happen. Asset price inflation may happen for sure, but I don't think Main Street inflation has to happen. I think they've done a really good job at making people accept the fact that their quality of life is amazing by sitting at home every night ordering fast food, and that's it. Like, look at the price of Domino's. It hasn't inflated that much.
McDonald's is up significantly.
That's
I
only the
think
last
for
3 years, though. It's only the last 3 years, so we have to readjust for that. But realistically, over the last 20 years, it's not that much.
I think it happens over time. I mean, you don't see it like okay, so prices like for a car, for example. I think my dad bought a I mean, I guess the last 3 4 years did definitely contribute to it,
Yeah,
but I mean, prices have. You're right. Prices do. The money does get absorbed by all these assets. They get absorbed by the real estate. They get absorbed by the cash. Gets absorbed by all the stocks. And now I think Bitcoin may actually be a major recipient of that. And because
of course.
Bitcoin has no
Why do you
real
think BlackRock's
utility,
behind it? Yeah, yeah, BlackRock's
because it
behind
doesn't
it
have
for a
that
reason.
right. That's so because it doesn't. I think a lot of people they misunderstand me when I say Bitcoin has no utility. What I mean by that is that in the real world, you can't do anything with Bitcoin. So you can't use it as you can't use it as shelter. You can't use it. You can't even use it as a paperweight. But that's what makes Bitcoin so powerful. That's what makes it so that um, it can absorb all of the wealth that the entire world creates
Yes,
forever.
exactly. So
Right?
when
Because
people say it doesn't have value, that's a clear sign that they do not understand how finance works. Because the only value that Bitcoin should have in this monetary world until the dollar is, gone, is the ability to absorb monetary premium. Why? Because there is no social liability when it comes to Bitcoin. They've had to use real estate, and what happened? They caused a social liability in 2008. Larry Fink is a monster, quote unquote, to the world because of 2008, right? Because of what happened in 2008. With Bitcoin, there's no 2008. No one's jumping out of a window. No one's, setting themselves, alight. No one's homeless. No one's kids are starving. Nothing. So BlackRock, in my opinion, is going to take the experience that they've had over mortgage-backed securities from the 70s and apply that to Bitcoin and put the pedal to the floor. Why? Because there's no social liability now.
can you explain what you meant by the MBS part, the 1970s?
Yeah, Larry Fink, a lot of people don't realize, was one of the core architects of mortgage-backed securities, which led to 2008, right? And he has the most experience of anyone in the space right now on how to securitize a market, how to securitize mortgages, right? So he's securitized debt on property. You don't think he's got the plan to securitize debt on Bitcoin at some point? So this is happening, right? This is going to happen. Bitcoin is going to be that asset, and I think it would be better for the world. I think the world is much better when real estate doesn't have the monetary premium that it has attached to it. I think it's a much better world. So overall, yeah, the bankers are going to get their way, but I think society actually becomes a lot better. We start bringing property prices down, or relatively bringing them down, right? Compared to incomes, we can let incomes go up and leave property prices where they're at. And suddenly, in 5 6 years of compounding, property prices start to look cheap again, right? Um, and I think this is a good thing. I think this is a good strategy. So when people look at BlackRock like the devil, I don't think they understand. I think that yeah, you had to use real estate because it's the only stable asset that you could offer a 30-year mortgage and then securitize it against. But now you can do that with Bitcoin, and that is coming.
Yeah, I think so too. So I want to ask you a question. I like to talk about how real estate prices are going to come down in terms of Bitcoin. When do you think a house is going to cost less than one Bitcoin, if ever,
In the US,
in the US? Like
well,
the
if you
median
go,
house, I think, is like 500K now.
if you're looking at median prices, fine. But you can, there's houses right now that are less than one Bitcoin in the US, right? But if you're looking at median prices, I think less than 2 cycles.
Less than 2 cycles. So by 2032.
Yeah. Yeah.
Wow. Yeah, that I think that's going to be huge. I feel like that's when I'm going to be posting about it regularly. I can already tell, like I'm already, because I regularly talk about it and I get a lot of shit for it, right? People don't like it when I say it because they think I'm a doomer, but I don't think they quite
Doomer, how?
understand the math.
How do
That's
they
it.
think you're a doomer?
So they think that I want to take wealth away from all the baby boomers who have spent their entire lives accumulating wealth, but that's not the case. I don't want to hurt anybody. I'm just telling you where the world is going.
Well, if you are an investor like my parents, right? My parents have the same story, right? So they, immigrated to the United Kingdom, followed all the rules, followed all the regulations, had 2 children, built a property portfolio because they thought they were doing the right thing. And the property portfolio has gone up less than the amount of money printed because of how money printing works and where it goes and everything else. So they are now they have pivoted to Bitcoin. I wanted to pivot them more aggressively to Bitcoin, but they didn't listen. But they're still pivoted to Bitcoin, um, you know, and they're fine, right? So if you're an investor, you're this super entrepreneur that you've been telling your friends that you are. One of the parts of being an entrepreneur is knowing when to fold your hand. And if you don't realize that real estate, it's now time to fold your hand and move on to the next thing, capitalism's gonna come and find you. Capitalism's gonna come knocking on the door.
Yeah, I don't think that. I think that's one thing that people aren't getting. So I actually have I have a spreadsheet. I'm not sure if you've seen it in any of my videos or anything like that, but I made a spreadsheet that basically shows you if Bitcoin has a certain return, where the price, sorry, how much of your portfolio you'll have in Bitcoin at a point. So the assumptions that I made here, just based on what you were talking about with your parents, you want them to be more you want them to go deeper into Bitcoin, but I think that any amount that they have, I think they'll be fine, right? Because, okay, so with this spreadsheet, I basically made these assumptions: 20-year time horizon, 35% returns for 10 years, 30% for the following 10 years. I know this goes against a lot of the models. I know this goes against basically everything that Giovanni has to say. For example, I mean,
Listen,
um,
Giuseppe has his own ideas, and I don't think we should. I don't think we should entertain them. I think people are being very, very
absolutely.
cruel by entertaining his ideas because you're letting a madman think he's making sense.
Nothing against him. I mean, maybe he has something there, but I think he doesn't. I think he doesn't account for a certain thing.
The guy
But
said
aside from that,
the guy said that his line predicted when Michael Saylor would come in and buy Bitcoin. The guy said that his line on a chart would predict when Larry Fink decided to buy Bitcoin. If we're not talking about mental illness and delusion here, what are we saying?
yeah. Okay.
As you
Okay.
know, I've
So
had a
let's.
pasta splitting debate with this guy. I'm sure you saw it. I'm sure
I've
a
seen
lot of
it. I've
people have
seen it.
seen it.
That's why I mentioned it. So okay. So let's say let's get past him. So let's say Bitcoin does do what I'm saying here.
Yeah.
Does what I'm saying here. 35 to 30. And your parents have, what's your parents' allocation right now? Do you know?
I wouldn't be able to tell you off the top of my head. No, it's
Okay.
roughly in the region of around 20%.
Okay. 20%. Okay. So let's say on this part on A20 here, if you have a $100 portfolio, if you have $100 and you put 20% into Bitcoin, 80% into stocks, in 20 years, you're going to end up with 97% Bitcoin.
Yep. Yep. Sounds about
And
right. Based
regardless of
on
what
my
you do, I mean,
calculation.
that's with my assumptions. I think the return could be higher. I think if you want to hold for longer, of course you can, right? If you have 20%, I think this just goes to show that you don't need to go all in on Bitcoin, right? You don't need to, based on what you're saying with your parents, I think they're doing fine.
I don't think anyone who look, the all in on Bitcoin is really for those Bitcoin maxis that found Bitcoin in 2014 and had nothing else going on in their lives and put, their savings from their work, etc., into Bitcoin. I think if you're coming into Bitcoin with any amount of wealth, right, you're not going to be able to go all in. I don't go all in. I like watches, right? I collect watches. Like my parents have real estate. Some people are going to own a home, et cetera, et cetera. Like, so the person who's coming in, the people that I really speak to, the ones that are coming in with a large amount of wealth, or who have built something up, are generally not going all in. My parents utilized, the debt system to basically figure out that they could refi their property portfolio and buy Bitcoin with it, right? Because one day they'll admit that they had a genius son that told them to do that, and then let the tenants basically pay for the Bitcoin. So, there's different strategies that people can use, but no one coming into this at this point and who's able to get to one Bitcoin, in my opinion, is going to go all in. That's a fallacy at this point.
Unless you, I think, unless you truly believe
Michael
it, unless
Saylor's
you've,
not all in. Michael Saylor's not all in on Bitcoin. I've been to his house. He owns the house. There's a boat in the backyard. Like
Mhm.
it's a fallacy, right? When
But
people say,
that's the
"Oh,
thing, right? I think the way that I see Bitcoin, it's supposed to be a way. Do you know who Oliver Velez is?
yeah," he's a friend of mine.
So he says Bitcoin is a way to buy utility,
Yeah,
and I completely agree with that. I 100,000% agree with that. People think Bitcoin is supposed to have utility. People think that money can't work without utility, but that's not what money is. Money is supposed to be something that doesn't have utility. And we used gold in the past. Of course, gold can be used in industrial purposes, industrial processes. But I don't. I think what that does is using gold as money actually stops us from advancing. Because I mean, if you think about it, gold. Let's say gold is so much better than these other metals at doing something, and because it's too expensive, we can't use it. I think
okay.
that keeps us behind, and I think not having utility is a good thing, right? So the fact that you're collecting watches, I mean, you get utility out of collecting watches, and I don't think that's a problem at all.
The utility I get from collecting watches is I get to look down at my wrist and feel happy for half a
Yeah,
second in a day when I've got other shit to think about. I've got people that I'm responsible for telling me they need this, that, and the other. I've got a portfolio to watch of people, of things going on. I got Bitcoin price going up $3,000 or $4,000 up, down. I've got random shit happening in the day, and for half a second, I get to look down at my wrist and feel happy because I have this beautiful watch on my wrist. That I think is worth it.
absolutely.
Simple as
I
that.
think that's a great way to actually end this conversation. I had a great time. Any last words for my audience here?
Yeah, look, Raja is 100% right in everything he's saying. If you're one of the morons that doesn't agree with how he's saying it, you need to go look yourself deep in the eyes, in a mirror, and understand that there's a bigger thing at play here rather than the words people are using. This is the scarcest asset humanity has ever created, and you've got one chance to buy it. When you're thinking about this, if you're under 30 or you're, say, under 40, and you've got children, you've got grandchildren in the future, they're going to be sitting there wondering why the fuck you didn't acquire as much Bitcoin as you could when everyone else that was doing it. So if you're not sitting there going, I'm not at least one Bitcoin, then you need to figure out why you haven't got there, what the gaps in your understanding are, and you need to fill those gaps as quick as possible because you're no longer competing with me anymore. You're no longer competing with Rajat. You're no longer competing with our friend Oliver. You're no longer competing with retail. You're competing with BlackRock. You're competing with nation states. You're competing with America. You're competing with the United States of America is about to set up a fund to buy Bitcoin. You're sitting there on your ass going, do I need to own as much of this as possible? Figure that shit out. But ultimately, there's always only three rules to Bitcoin, in my opinion. Step number one, you got to buy Bitcoin. Step number two, you shut the fuck up. And step number three, you're going to get fabulously wealthy. Thanks for having me.
That's it. Thank you so much thank you so much for putting the time here, man. I really appreciate that. All right. I'll actually put your information in the description below. I'll mention you on your
Perfect.
YouTube
Yeah.
and your Twitter. Hopefully, you get some traction. Some people come your way. I think the best thing we can do here is just spread the knowledge,
Yeah,
keep
for
spreading the
sure.
knowledge over time, get better at it, and I think we're doing that.
Exactly. That's what it's about. At the end of the day, none of it's going to matter, right? In 10 years, the only thing that's going to matter is who managed to buy Bitcoin and how much did they manage to buy. It is a very, very binary investment, right? It is a monetary network, not a human network. And what that means is how much you own of the network actually is important. And a lot of people, a lot of the fucking happy hippies, the way I say it, don't seem to understand that. But it is what it is. We'll see. We'll see what shakes out in 10 years. But this was a lot of fun. Anytime you want to do this, just let me know.
Absolutely, we'll do.
All right, my man. See you later. Have a beautiful